All you need to know about stocks and shares ISAs in 2026. At last count, the total value of all the stocks and shares ISAs in the UK was £511 billion. And a few thousand people with stocks and shares ISAs have actually become ISA millionaires. They've built up more than £1 million worth of investments in their ISAs over the years. Imagine seeing a balance like that on your account. So, what is a stocks and shares ISA? Why are they so popular? And if you want to invest to grow your money, is a stocks and shares ISA right for you? Hello, I'm Gary with Moneyfarm, and I'm going to talk you through all of this today. Let's start with the basics. The ISA in stocks and shares ISA stands for Individual Savings Account. So a stocks and shares ISA is a type of account to help you invest. As the name suggests, you can put stocks and shares into it, but also other investments like bonds and funds and ETFs. Stocks and shares ISAs have been around since the end of the 90s, and for most people here in the UK who want to invest, they're the first account you tend to think of. Why? What is it about stocks and shares ISAs that make them so popular? Well, for the most part, it's to do with tax. When you keep your investments in an ISA, there's no tax to pay on them. Everything that grows inside the ISA is yours. And when you sell your investments and withdraw the money, there's no tax to pay. No capital gains tax, no income tax. In fact, you don't even have to declare a stocks and shares ISA on a self-assessment tax return. You often hear people in finance referring to ISAs as wrappers. That's rappers with a W, not the musician type. This is because everything wrapped up inside an ISA is kept safely out of reach of the taxman. When you're starting out investing, it can be hard to appreciate how big a deal tax-free investing is. A bit of tax on a small gain from investments isn't that noticeable, but as investments grow over the years, if they're not in an ISA, that tax bill could get pretty hefty. Inside an ISA, there's none of this to contend with, and over time, this can have a noticeable impact on the value of your ISA. Remembering, of course, that the value of investments can go down as well as up. So none of this growth is a given. Why don't you have to pay tax on investments in a stocks and shares ISA? Well, this perk comes from the government. They want to encourage people to invest as a way to build financial resilience and save for the future. And waiving the tax on investing is a pretty effective way to incentivize us. Now, there's no limit on the amount you can have in a stocks and shares ISA. As I've already said, there are more than a handful of people who have got over £1 million. But because of the tax perks, there are limits to the amount you can pay in every year. Let's take a look at this. Every tax year, which runs from 6th of April to 5th of April, UK residents aged 18 and over have an ISA allowance of £20,000. Now, this ISA allowance is the total you can pay into all ISAs, not just a stocks and shares ISA. Although you can choose to pay the whole amount into a stocks and shares ISA if you want. When talking about ISA allowances, one really important thing to note is that if you don't use your ISA allowance, you lose it. Unlike some allowances, you can't carry ISA allowances from one tax year to the next. What if you're thinking that £20,000 is a whopping allowance and you don't stand a chance of investing that much every year? Well, bear in mind that with investing, even small amounts can add up over time. There are plenty of people with chunky stocks and shares ISA balances today who got there by investing what they could year after year, and then just leaving that money invested. A big part of this chunky balance is down to that winning combination of time and compounding. Compounding being the phenomenon where the gains that you can make on investments start making gains of their own, helping the value of your investments grow and grow over time. And the longer you leave your investments where they are, the more time compounding has to take effect. Now, once again, let me remind you that investments don't always grow. History does show that shares have done better than cash over the long term. We're talking the past 100 years or so. But that doesn't mean that this trend will go on forever. And even if it did, not all investments are made equal. Some perform much better than others. So if you want your stocks and shares ISA to have the best chance of growing, you need to pick your investments carefully. Let's have a look at this. First, what kind of investments can you put in a stocks and shares ISA? Well, that does depend on who your ISA is with. You can set one up through a high street bank, direct with some investment providers, or through an investment platform like Moneyfarm, and some of these places offer a bigger selection of investments than others. But in theory, you can mix and match all sorts of investments. You can pick shares in individual companies or bonds, or you could go for funds. Things like actively managed mutual funds, index funds, or ETFs. And within all this, there's a huge amount of choice. You can opt for shares or funds specializing in UK companies, choose to invest in big US tech giants, or smaller Asian companies, clean energy, healthcare. Really, the possibilities are almost endless. Before you plunge in and buy investments for a stocks and shares ISA, do make sure you understand what you're investing in and that your choice is right for you and your personal circumstances. I've already said that all investments come with some degree of risk. That's the trade-off for making potential returns. But some investments are riskier than others. Shares in emerging market companies, for example, are considered riskier than big companies listed on major stock exchanges like the FTSE 100 or the S&P 500. And investing in the shares of just one company is considered riskier than buying a fund that contains a whole range of shares. Because with that single share, you're putting all your eggs in one basket. If the company does badly, your investment may go down. On the other hand, when your money is invested across 100 different companies in a fund, if some of these companies perform poorly, others should do better. In investing, this is what's known as diversification. If getting to grips with investing and choosing all your own investments seems too time-consuming, or you don't have the confidence to do it yourself, then don't worry. You can still open a stocks and shares ISA and benefit from investing. Some providers, like Moneyfarm, offer stocks and shares ISAs, where you can invest in a ready-made portfolio of investments that are professionally managed and match your goals and risk profile. What else? Well, stocks and shares ISAs are simple to set up. Once you've found a provider, you can usually do it online in next to no time. Generally, all you'll get asked for is some simple personal information, your national insurance number and your bank's details so you can buy some investments. And as soon as the account is up and running, you can start investing. And you can do this as frequently or infrequently as you want, as long as you don't exceed the ISA allowance. You can also get at your money whenever you want. It isn't locked away, but be aware that experts do say that when investing, you should always be willing to put your money away for at least 5 years. So let's have a quick recap. Stocks and shares ISAs are available to UK residents who are 18 and over. You can invest up to £20,000 into ISAs every tax year, although this amount may change in the future. There is no tax to pay on any investments in a stocks and shares ISA. So I hope you found this video helpful. If you did, please subscribe to the channel. You'll find more information on investing and Moneyfarm in the description below.